good afternoon. You're watching Closing Trades on ET Now. I'm Anisha Jain, and the closing trades are not looking very healthy if you're a bull. And I say that because it's another day of almost a 200-point slide coming in for the Nifty. We threatened to go below the mark of 19,300. Though for now, at least, we are holding on to that mark of 19,300, but just by the skin of its teeth. It's ICICI Bank which is pressurizing the market by 40 points. To add to that, Reliance, HDFC Bank, they're not fighting for the bulls at all. In fact, all sectors are in the red today. The only soldier, if I can call today, is Pharma, because that's the pack which is holding up in the green. That too is off the highest point of the trading session, but Loris, Lupin ahead of its earnings, Oro Pharma, Gland Pharma, they are quite active, and you just got numbers from Sun Pharma largely in line with expectation to a tad bit better, and that is definitely having a bit of a rub-off impact. Earnings reaction coming in from a lot of companies, so good numbers from KSB Pumps, that's high by 17%. Pratap Snacks is trending high by 8%. Mankind Pharma 2 from the Pharma pack is up 7%. On the other hand, weak earnings from Indigo, Godrej Properties, Gujarat Gas, those are the stocks for you, down with a cut of around 3 to 5%. But it's not only equity markets which is making headlines, a lot of moves in the treasury markets as well. If you look at the 10-year yield, that's already inched higher to the levels of around the levels that we had seen back in April 20th. So it's higher by 7% already, beyond the threshold of that. And the rupee also is closing into that 83 level. So a bit of a weakness coming in for rupee as well. But Nikunj, we have been thinking, that it's not a reversal of sorts. It's not a big crash, but there's no buying happening at lower level. Does that make you a bit more circumspect in the on the market mood?
Why was there buying? What was causing the buying? And what was so different in the month of June and July that in a sense that the buying in a sense was really one-sided? These are basic questions you go to ask, right? The buying started largely because FIIs, they thought that they went into China, and in China they lost more and they had to come back to India. That coincided with a decline in inflation, and that also coincided with a stable macro environment at global level, which led to a smart and a gangbuster rally in US markets. Now what is the setup? I think Indian markets, if you compare that, if you look at Indian markets not in isolation but from the global lens, globally it's not looking all that hunky-dory. 10-year paper, which is the US 10-year paper, that has inched higher to north of 4%. Crude prices are on a, I won't use the word tear, but are clearly on in an uptrend. Chinese economy, the latest data seems to be indicating that the Chinese economy is picking up, and that is fueling some inflation. So there is a bit of a shakeout, and a shakeout will lead to some changes. It had almost become like a one-trick pony that everyone thought that FI flows have reversed, and they've reversed permanently. But when that got challenged, and the fact that we got much more than what we wanted in terms of earnings, triggers, listing of Jio Financial Services, demerger of ITC, buyback from L&T, the market suddenly is not getting a daily dose of, some dopamine drug which will keep the bulls happy. So, this market actually got good numbers, lot of support, and almost a daily dose of a dopamine, shot from one company or the other. In August, when that is missing, and that is just leading to discovery.
There was nothing fundamentally in any case.
No, it's not about fundamentals. You got a fundamental news, but the absence of anything new and the lack of anything which will be a trigger for the bulls, I think in a sense is just giving you telling this is just pushing the markets back. So it is not a crash.
This is normalizing, you are saying. This is back to normalcy, what the market texture usually is: consolidation, a bit of sideways move and all of that. Because there is no fresh trigger, there is no fresh news in terms of individual counters as well, which we had a lot of to deal with in the month of July.
So markets will go up. Then the weak players will always, there would be shakeout, weak players will get out. Then the bulls will gain more energy, new players will come back, that will gain again. That's how I think markets move. But what had happened between April and July is that you just had one side move, there was no shakeout, and now the shakeout is happening. So typically just imagine a tree with ripe apples, right? If a shakeout happens, the weak apples will fall, but the tree is not going to get uprooted. So India is the tree which will not get uprooted, and weak apples are those weak traders who bought with the assumption of with the assumption of perpetuity, I think they've been forced to now step back.
Okay, let's just take that quick word from you as well. Do you think that what the market setup is, and are we, going to go below 19,300 as well?
Well, I think we already went below 90,300, but I don't see any meaningful correction. In fact, I think at current levels, if you ask me, I would actually go for a contra buy on the indices, both on the Nifty and Bank Nifty, from an intraday to maybe BTST perspective, because I think at current levels, most of the indicators are oversold back again. In fact, on the daily charts, we are seeing a lot of the stocks forming a bullish RSI divergence. So
sure. Okay, we have the management of Dabur India joining us. The numbers were just flashing for you on the screen. Mr. Ankush Jain, the CFO at Dabur India, is joining us because overall it looks like a decent set, broadly in line with expectations. So, Ankush, let me begin by asking you, in terms of the volume growth and the market share, it seems like that the consolidated volume growth is largely in line with what the street was expecting, and that has come at the given the fact that you've managed to increase market share across major categories. Talk to us about all of that.
Yeah, first of all, good afternoon, and good afternoon to all your viewers. I think happy to report that, first of all, we have crossed 3,000 crores first time in the quarter. And this is the highest ever turnover ever recorded by Dabur in a quarter. And this is backed up by, as you're rightly saying, gains in market share across categories. Just to name a few, for example, one of the most competitive categories, hair oils. We have gained 200 bps market share and reached all-time high of 17.4%. Likewise, in wet toothpaste, again, a very high competitive intensity. We have gained 50 bps market share. And just to add, Dabur Oral Care now is present in every second household in the country. Plus, any of the Dabur product is now available in 8 out of 10 households in a big country like India. So, yes, that means that the execution strategy in terms of driving awareness, driving availability, etc., is working really fine. The teams are doing a great job. And even in other competitive categories like Chyawanprash, we have gained 300 base market share. Honey, we have gained 20, and even shampoo 10. So by and large, 85 to 90% of the categories we operate, we have gained a market share, which means the strength of the brand, Dabur and our all power brands are increasing, quarter and quarter. And this trend is being witnessed over last, 8 to 10 quarters continuously, which actually demonstrates the strength of our brand and also our execution capabilities, and also, is testimony of our, very focused strategy and execution on ground.
Okay. Your volume growth is a function of price hike as well as what the real, underlying product offtake is. Can you quantify for us that the growth what you've witnessed, how much is that largely because of price hike?
Yeah, so let's say in India, our growth is 8%. Out of that, volume growth is broadly 3%, which means the balance 5% is more or less the price increase. And just to add to this, over last 1 year, the inflation has been really brutal. The inflation in India was almost 9% in our categories as well. So we had to take a lot of price increases last year, 6 to 7%, and then a significant part of the flow through of them are coming. But good point is that we are seeing an uptick in volume, both at our rural, urban, as well as our by and large in all the categories. So yes, over last 3-4 quarters, you would have seen nearly a brutish volume growth,
sure.
Almost flattish. But now there is an uptick, and it's broadly 3% plus a 5%
sure.
another of price increase. Yeah.
Sure, Ankush. Since you're saying that it's incrementally getting better, could this 3% turn to, let's say, 8-9% by the end of the year? Is that a realistic assumption? And with respect to market share, I specifically wanted to ask you about the toothpaste segment, because if you've managed to gain the market share there, who is actually losing out? Which are the markets where you are seeing the market share gain the most?
It's very difficult for me to comment on the call, who all are losing market share, but for sure, we in our Dabur Red toothpaste have gained 50 bps market share. And just to add on, we also took Mr. Amitabh Bachchan as our brand ambassador, and that has also been helping. Apart from that, the penetration levels of also Dabur Red are increasing. But it's very difficult for me on the call to say, who all are losing.
So the volume growth that I asked you for the full year?
And volume growth for the full year, again, difficult to say because as we speak, while certain categories, as inflation is subsiding and more moderating, inflation in as healthcare and HPC is moderating, which is leading to volume growth. But because of seasonality in rain, we are a bit cautious in our beverage segment. Hence, very difficult to comment on how full year volumes will pan out. But, we are working and targeting at least increase in market shares in most of the categories we operate, meaning we will be growing. Our intent is to grow higher than the industry growth. And we are pretty optimistic, at least, in healthcare and HPC because, as I said, the inflation moderating. So things should become better, at least, it's only a matter of timing, 1 month or 2 months from here or now. Yeah.
Sure. Ankush, a quick word on the margins as well, because at the start of the year, you had given a hint that 19.5% is going to be the full year margin. Are you maintaining that? And secondly, today there were a lot of reports about your honey product that there are chemicals in your honey which are carcinogenic, which causes cancer, and that led to the slide on the stock at the start of the day. Would you like to clarify on that honey, business as well?
Yeah, so two parts of the question. First, on the operating margin, by and large, we maintain that at an annualized level, we are targeting 19.5% or thereabouts. It'll be incrementally higher than the last year because we see a moderation in inflation and also we are pushing and stepping up accelerator on our cost-saving projects very, very aggressively, to look at every cost and every value chain. So we are confident on that. However, any upside in gross margins, we want to plow it back to our mainstream media to generate demand because we feel that we are here for the future and we want to have a long and sustainable growth of our power brands, of all our categories we operate in. Now, coming to the second question on your honey bit, yeah, we heard this news and we would want to say that we stand by the purity of Dabur honey. Every batch of Dabur honey which is produced in any of the factory complies with all the FSSAI standards and both at the time of receipt of the raw material and also post the finalization or packaging of the final product. So in no way it can be, we don't know, this seems to be a very motivated report. And also, we have recently got an AgMark special note certification. Plus, to add on, all our honey are manufactured in US FDA certified facilities, and we can say with certainty that this is the purest honey India makes. Dabur makes in India.
Time, Ankush, and thank you for joining us. Meanwhile, what do we have on the market? 19,500 gone, 19,400 gone, 19,300 got tested, and we managed to bounce back. Now, how much are we down? Only 700 points. That's not even 5%. Now, frankly, if you look at the history of bull markets, and even if you look at the kind of comeback what we've seen in the COVID market, markets have corrected. There have been more corrections of more than 10% on a regular basis. We'll perhaps look at the data tomorrow. But for any bull market to correct, I think it's par for course. The typical feature of a bull market is that they are very swift in nature. They're very sharp. They just are like a guerrilla attack. You don't know when it hits you. And when it hits you, it will leave real, serious collateral damage. So when you see a 700-point decline on the Nifty, obviously you would say, oh, what's happening? But that's how markets are. I mean, it's like a cardiogram ECG. Has to go up and down. Imagine a straight line. You don't want a straight line. So what you don't want is a straight line, like no action. What you want is up and going down. And that's what creates volatility. And strong hands will get in, weak hands will get out. That's how typically markets work. Okay, now government has decided to put import restrictions on imports of laptops as well as iPads or tablets. This is something which in a sense could be a big booster for the electronic manufacturing industry. Why? Because because in India, electronics import is a very large component. And a lot of global companies in India, they're using India as a consumer market, but they are not investing in India to create manufacturing supply chain. Look at Apple, what it has created. I mean, you've got a situation where the global MNC companies, they want the Indian consumer, but you're not ready to give to the Indian labor. I think that is something which needs to be checked because we're losing forex. We are not able to latch on to what the great manufacturing boom is. So a move like this is something which is only going to kickstart a fresh manufacturing wave in India. Jairam Sampath, whole-time director and CFO with Kaynes Technology, joins us now. Jairam, good morning. Good afternoon, rather. Thank you for joining us. Now, Kaynes Tech has little presence in laptop manufacturing, but considering that this seems to be the intent of the government to protect and ring fence the entire local industry by bringing import restrictions, would you be looking at investing in the assembly line of laptop and tablets?
Yeah, Nikunj, thank you. Thank you for that introduction. And it was just about a month ago when we had a meeting with the Honorable Minister for IT. And it was very pleasant surprise to see this announcement come in so early. Almost 12 billion worth of computer hardware, which is currently imported, will have to be done over phases in Indian manufacturing. It will come in different shapes and sizes. Some will be kit import, some will be full-fledged production. As far as Kaynes Technology is concerned, we already approved vendor for Intel for laptop production. We have showcased our laptop after producing. So we were one of the 8 companies which are likely to benefit from this move. We had met the Honorable Minister of IT too in a high-level meeting. And we also are a company which has manufactured servers and so on. So we look forward, along with several other players in the industry, to give our might for this. And we already have lines which are capable of doing this particular product, high-tech, and we specialize in these kinds of productions. So government has actually, thanks to the government for creating the environment to flourish this business.
And this is Anisha also joining in the conversation. So we understand that there's this opportunity and the potential. But the question is that realistically turning into orders? The tie-up or the partnership that you talked about, Intel, is it actually converting into the order inflow for you or any other clients that you have had talks with? For instance, Dixon had a tie-up with Acer. That stock too was flying away in the trading session today.
Yeah, so from today, these entire things which have been under the wraps or maybe behind the scenes activities will now start bearing fruitful results, because there is no other option but for users to buy it in India, which is manufactured inside India. Obviously, there is a license possibility which the companies may have to explain as to how they are going to do the value stream in India. The intention of the government is clear, and there is a lot of on-ground action. Just for your information, over the last 3 months or so, IT was one of the sectors for us, not a major sector, but today it has become a major sector. And we have also applied for the PLI for this particular sector too. And we have put good resources. We have improved our infrastructure. So we can do laptops and servers, which are kind of high-end part of the IT. So on-ground reality is that there's a lot of business already there. And this will only push the dial in the positive direction.
Okay. If you have to, let's say, create a fresh assembly for making laptops and tablets, is that high capex and a business which perhaps will involve a lot of front-end investment?
Yeah, so as far as the electronic manufacturing is concerned for laptops, it's no different from any other complex electronics manufacturing, which we've been doing. So it's a matter of just putting, these are light capex industries. It's not that the machine per se can be purchased with some amount of money, But what is critical in these kinds of products is that you have the capability to have a technology absorption capability? Can you test it? Can you make it defect-free? Just like maybe people in China and elsewhere who produce these products do. So that is something which companies who have a good, strong quality, quality culture, only they can probably survive. And mind you, this particular business, it's a large-scale restriction that government has put. So it has got those high-end computers too, which are low in volume and high in quality requirement, and there's about mass production too. So this helps everybody. And I think I just take a half a minute more and I'll tell you at a broader level, there have been a lot of activities by government in terms of even railway signaling and all other areas. They've been talking about this. And I think if you see the total amount of quantum of imports, mind-boggling. And this is just the tip of the iceberg. So I think it's a good start point, and you can see for next 1 year a lot of activity in this.
Sure. Sure, Jairam, we have you on a bit of a patchy line, so we'll just take, your a direct answer on this one because you'd guided for a revenue of around 1,700 odd crores at the start of the year with an EBITDA margin of around 15%, if I have it right. Do you maintain that?
Yeah, our
Sure.
revenues eventually will be 1,700 to 1,800 crores. Yeah.
And the CAGR for the next 4 to 5 years is going to be at least 45%.
Yes, yes.
Sure.
That is a safe
So we are looking at
information.
about 160 to 180 crore of profits this year.
It should be more than that, I think. Yeah.
Okay, so sounding very confident, 1,700 crore on the top line, margin of at least 15% and more than 170, 180 crore on the bottom line. Thank you, Jairam, for joining us today. But on that note, we'll slip in a very short break. Don't go anywhere.
Recovery from the day's low. Naresh, it's been what 800 points down on the Nifty. Time to look at the other side and maybe go in with a long position, take a long on Nifty, take a long on Bank Nifty. Hopefully you'll get a couple of 100 points on the Bank Nifty, 200-300 points on the Nifty tomorrow morning.
So of 100, 150 points on the Nifty and say somewhere closer to 300 points on the Bank Nifty. But one has to have a very strict stop loss placed at 19,290 levels, which is the 10 points away from the recent lows. Now, if you look at the last time we saw a little bit of a pause in July, was around 19,300 mark. So that was the target after breaking 19,550, 600. So from here on, we could go test 19,450 levels and then again review. So overall, the fact is we've not seen a similar sell-off today in the small cap and mid cap indices. So that makes me more bullish for a bounce back from here.
So Naresh, if the market has to go down, could it be autos, could it be banks?
So it has to be autos are not as relevant in terms of weightages. So even if they fall as much, it does not impact. A single HDFC Bank falling down has a bigger impact with a 14% weight, which is more than I think it is 2x or 3x the whole auto weight. So from here on, what is interesting is the fact that HDFC Bank is back to 1620, 1630, 1600 is the low. You have Kotak Mahindra Bank, which has started reversing from the 1800 mark. So it does not look like we are seeing a crack in the banking space as such. If we look at same way, SBI has corrected from 620 to 580, 590. So banks is the place which could actually take it down, but banks are not cracking. So that's the reason I would be on a wait and watch mode in terms of taking a shot. But overall, technically, a bounce back from 19,300 seems possible.
Back from 19,300, but just wanted to address some stocks and news and bring up those graphics as well because M&M is in focus. Temasek has decided to invest 1,200 crores in Mahindra's EV vertical. Of course, this is coming at a valuation of around 80,000 crore rupees, almost 15% higher than what we had seen in the earlier round when the valuation was being pegged at around 70,000 odd crores. So that stock should come up for you on the screen because it's down about 1.5%. It's probably lower than what Street was expecting because we are seeing a bit of a slide as far as that is concerned, and that's the comparison of the last two transactions that have happened for M&M in terms of their deal as well. Separately, it's all about earnings, so let's see the reactions coming in on that. Zydus was a weak set, ditto for Indigo as well as VIP, so those stocks are on the back foot. Strong earnings from MRF that we got today. KSB Pumps is high by 18% and AkzoNobel is the other one. Lastly, of course, Ambuja and Sanghi Industries, both of them are in focus because Ambuja has decided to buy out 56.7% stake in Ambuja, and that's coming in at an enterprise value of 5,000 crore rupees. So all of these stocks are in focus. But what's also in focus is also Karnataka Bank because it reported a healthy growth on a year-on-year basis. The asset quality has also improved. Mr. Sri Krishnan H, the MD and CEO at Karnataka Bank, joins us on the show to talk to us about their earnings. Hi sir, good afternoon. Thank you so much for making time and speaking with us. Well, the profitability has jumped almost threefold, 370 crores versus 114 crores. Could you talk to us about how the overall NIMs have been, how the growth in NII sector has been and how it will be for the rest of the year as well?
Thank you so much for getting me on the show. Actually, it's been a historic moment because there are several parameters where the metrics we are on a historic high. So it's about the net profit. There is also the NPA, which has come down, and that's a huge win for us. And historic high on ROE as well. So this has happened due to a very concerted effort. Just to make sure that there's a disclaimer. I've been in this bank a little less than 2 years, 2 months rather. And there is a lot of effort that we have put in. The earlier team has also put in. So there's a new management team who's quite focused, and we are looking at doing a couple of things. So one, which is related to how to run the bank more efficiently, how to change the bank in terms of the growth, and overall how to grow the bank. So these are the three buckets that we're really getting all our projects, all our initiatives, and all our efforts focused on. And
Sure.
this includes a lot of simplification of processes,
Right.
then growing the book, of course.
Sure.
That's the biggest objective right now.
Right.
Yeah.
So, no, Mr. Sri Krishna, we understand that you're doing a lot to improve it, but talk to us about numbers in terms of how the improvement will show in the balance sheet and P&L. What kind of loan growth are you penciling? What's the NIM projection for the year? And what's your overall expectation of how the ROAs will be by the end of the year?
So let me go with the book growth first. On the book growth, the assets have been growing on an annualized basis of about 10%, and we want to really get to a level where it is closer to the 20s, and this means that we should be doubling our book in about 3 to 3.5 years, and that's a stated objective with which we are going. Obviously, this requires a lot of efforts on the CASA. So there are a lot of bundled offerings that we are doing on CASA to grow the liability side of the book. And there is also the cost of funds, which will also have a very, very positive impact if we actually grow the CASA. So just to kind of give you the perspective, our CASA remains at about 32 to 33%. Then everything related to the overall advances and the growth there and the overall NIMs also, it is having a very, very positive impact. And we have reduced the NPAs. And this has come down to 1.43. And we have also accelerated our provisioning based on certain parameters. And I think, we are on a good run right now. In terms of the projection from an ROE and an ROA perspective, I think, ROE anywhere around the 17 is high, but let's say that we would be in the region of about 16 plus for sure. And ROA, actually, we have been very healthy. We moved up from the erstwhile 1.2 range to about almost 1.4.
Sure, sir. On that note, we'll let you go. Thank you so much for joining us today. A quick conversation, but then the markets are actually calling us for our attention, given the fact there has been a bit of a recovery from the lowest point of the trading session. At least at the Nifty level, we're above 19,350. But on that note, slipping into a short break.
All major markets are trading with a negative bias. Dow futures and European markets, all of them are down. Murray Joshi, what is your sense? Do you think best of the gains for summer of 2023 or monsoon of 2023 are behind us now?
Afternoon, Nikunj. I think two aspects. One, I think the entire downgrade scenario that is getting played out in the US markets is getting played in the world markets. And the markets needed some sign or an excuse to probably correct. Obviously, excesses had got built into the market as well as we were hitting our all-time highs. And somewhere, I think with this reasoning, I think the market has had its fair share of correction. Now, to a certain extent, a lot of sectors, Nikunj, are still holding out in terms of how we track at O'Neill the distribution day pattern. And though on the index, the distribution days are stacking up, the broader markets and the broader indices at the sub-index level, they are largely holding up above their key moving averages. To a large extent, I think it is profit booking, which has been extensively done. There is one element of the market which is probably saying that China might recover. But all the data points that we are probably getting in from China, whatever that is, are still indicating that the recovery might only happen in the second half. So our sense is that the markets might just settle down after the big correction that we probably see. And a typical sectoral rotation will be at play. We've already seen pharma starting to hog the limelight. So more defensives will probably come up in terms of the sectoral rotation as we consolidate over the next few months.
What has changed for pharma? Is it just a catch-up rally or the fundamentals have also changed?
The two aspects here, Nikunj. One, I think there has been a clear case of under-ownership compared to the other sectors. I think the consensus sectors, including the likes of infra, construction, defense, financials, were very, very heavily owned. As the market is now probably getting into a more corrective phase where valuations are probably getting off at this juncture and where a little bit of a derating is happening in terms of forward multiples. I think under ownership and valuations, which were reasonable for the sector as a whole, are obviously aiding. The second element obviously is numbers and commentaries from a lot of managements. US markets seemingly looking better. Pricing pressures are definitely coming off. The expectations in terms of new product launches with a lot of FDA resolutions expected to come through. And as they are coming through with a lot of EIRs that you're probably witnessing for the sector as a whole, is probably expected to ensure that a lot of ANDAs and niche offerings start coming through most of the plants which had got affected, which might also propel US sales in a much healthier fashion going forward. And with margins expected to stabilize and improve with this mix going forward, the bottom line growth can be far better than what we've seen in the last few years. So I think those are the clear-cut tailwinds that are aiding the sector.
It is not looking bad at all. IRFC, 44 rupees, up 11%. HCC, 5%. India Bull Housing, I have no idea why, 10% up. We do understand that there is going to be change of management. I think somebody from LIC is moving. That's what Ajay was telling me. But in general, I think there's IDBI and IDFC, India Bull Housing Finance, that's looking strong. A large deal in L&T Finance holding by Bain. It seemed to be having a very little impact on the mood per se for stock. I mean, Bain stole the investment in Axis and L&T Finance. I don't know why. But they've sold two of their investments. And then you got HDFC, you got SBI, which is at 590. But the star one, Kunal, is IRFC, 44 rupees, 424 million shares in terms of volume.
Yeah.
Crazy volumes, right?
Yeah, 42 crores volume on the daily charts on NSE.
I've never heard something like
and
this.
not just today, actually, it's been going high for the last 2-3 trading sessions.
Yes,
Let's pull up the weekly chart if we can. I think that stock was coming on the radar earlier as well.
Yeah, it was 34 start of the week, and now I think the stock is at 44, so more than a 30% return so far this week.
And we talk about correction in the market.
Exactly.
But
What's
you
happening
want to
there?
get your hands on the likes of IRFC, and is there more upside?
No, in fact, it's a very good chart, IRFC. IRFC, IRCON, IRCTC, something which we discussed, I think, 2-3 days back when it was at 630 levels. That also is looking attractive. If I'm not wrong, even IRCTC has recovered in the last 2-3 days to 650, 660, the last I had seen. So there is definite meat for these railway stocks even at current levels. Now the question is that how much funds you want to allocate at current zone. I would believe that possibly from here on, IRCTC could actually turn out to be a better play. The stock has started to show signs of recovery, not yet confirmed a breakout, which means that there should be more legs on the upside, at least for IRCTC, before it starts to get in the notice of many traders in terms of a breakout. So that's a better trade at current levels.
Zomato head of numbers 84. You got IDFC Bank 87.5. Now I'm simply picking up the outliers here, and the other one, a classic, is REC, Nuresh. 2% higher on a day when everything is falling flat.
So REC and PFC have been one-way outperformers in the last, say maybe over the last 2 weeks. And we are seeing that rollover coming in terms of momentum holding on even after the 2 days of price correction. So out here, the price is still, say the trend is still up. It's just that the risk reward is not great at current levels. So REC was 160, maybe 8-10 trading sessions back, and we are closer to 200 now. So the risk reward is not great, but the momentum is still very, very positive.
Okay, let me just talk about some of the other buzzing stocks with Kunal. Kunal, Dixon Tech, that's high by 7%. You also have Lupin ahead of its earnings, which is up 4%. And I don't know if you have enough history on Mankind to talk about that.
Yeah, Mankind, I don't track also that closely, but I think Dixon is something which is very interesting out of the two which you mentioned. I would believe that we look at the charts in the last 2 years from I think 6,000 levels, the stock had fallen sub the 3,000 mark, and then from 3,000 it's recovered back towards 47.50, which was the recent high. So I think that's a much more better chart, and it indicates that maybe the worst or the major worst could be behind for the stock price, and we could probably see a steady build up. I would actually expect that possibly in the next 3 to 6 months, we may expect Dixon to come back towards 4,800 to 5,200 levels. Lupin, on the other hand, I would actually believe that it's a good time to try and exit the stock. Most of the pharma stocks have started to hit back their overbought nature in terms of indicators. Lupin, Dr. Reddy, Sun Pharma, many of the indicators over here are reaching overbought. So I think it's actually a good time to book profits over here.
Off from the day's low, but still off from the day's high. That's the market for you, not at the lowest point of the day, but certainly up by 100 points from the day's low. Well, we've got a view coming in from the CFO of Adani Group, Robbie. Well, That's his Akka name. That's Joginder Singh, Group CFO of Adani Group.
AEL's business portfolio comprises both established and incubating assets. These are spread across energy and utility, transport and logistics, direct to consumer and primary industries. In services, AEL includes Adani Digital Lab and the Shared Services Center ABEX. For sustained long-term value, AEL has significant progress in our attractive incubation pipeline. This first quarter of financial year 24 is powered by the emergence of green hydrogen business, Adani New Industries Limited, that now contributes over 10% of EBITDA. Our performance for quarter one reflects a strong operational momentum on the back of ANIL ecosystem and incubating businesses. The consolidated total income stood at rupees 25,810 crore. Consolidated EBITDA year-on-year increased by 47% to rupees 2,896 crore on strong operational performance. In line with the increased EBITDA, consolidated PAT increased by 44% to rupees 674 crore. In our endeavor and commitment of having 1 gigawatt data center platform in this decade, I'm pleased to inform you that Adani Connects has secured the largest data center project financing deal in India with $213 million US construction finance facility. Moving to updates of our various businesses, Adani New Industry Ecosystem, Adani Airports, Adani Roads, and Adani Connects data centers. In our Adani New Industry Ecosystem portfolio, during the quarter, the Integrated Manufacturing Division received provisional certificate for 5.2 megawatt prototype 1, and production is expected to commence during this quarter. Further, ingot wafer preliminary work has commenced, and we will update at half year. In Adani Airports holding portfolio, passenger movements during the quarter are at 21.3 million and tracking at 85 million a year. In our Adani Road Transport portfolio, our construction work is progressing well and in full swing across 10 projects. 3 out of these 10 projects are now 50% complete and on schedule. In this journey of value creation, AEL has always embedded ESG in its business philosophy, and to that extent, some of the awards highlighting our consistent endeavor includes in ANIL, the green hydrogen ecosystem, we won the Aegis Gramwell Award in the category for innovation in manufacturing, and in Adani Road Transport, our team won Energy Conservation Award in gold category in the road construction.
Take it across with Mayuresh as well. Mayuresh, hi. Good to have you. Just wanted to begin by asking you about Dixon Tech. That's flying away in the trading session. And tell me one top bet from the pharma space.
So, Anisha, afternoon to you as well. I think as far as Dixon is concerned, I think the news which probably came through early in the afternoon in terms of having an import ban, in terms of laptops, mobile phones, and other electronic gadgets and accessories, I think that is what has spurted the stock in terms of today's trade. The second element also is that it has got huge orders coming through, both in terms of laptops. They are probably the front runners in terms of Acer laptops, 5 lakh capacity order. Expectations in terms of mobile phone manufacturing, LED TV manufacturing, and therefore I think the entire ecosystem that we probably got in terms of the backend required for electronic manufacturing, and with the ban that is expected to take place, it becomes a keen and a clear beneficiary going forward. The second element, obviously, in terms of Anisha on their business outlook as well, is that the ODM part, which is the original design manufacturing part, is expected to grow up significantly, both for Dixon and Amber. That's a relatively higher margin business. And there, I think the order wins from existing clients and prospective ones is getting up as well. With operating leverage playing through, even margin improvement should be obvious. So I think a lot of tailwinds in terms of prospective earnings for the stock itself.
Sure.
From the pharma pick, supply is something that we like. Our take is that numbers have been exceptional so far. Margin guidance has been up.
Right.
Expectations in terms of more inhalers coming.
Sorry, Mayuresh, interjecting you there because numbers for Zomato are hitting the screen, and it's a bit of a pleasant surprise because the company has managed to report a profit on the bottom line. The street was expecting a loss to the tune of 150 crores, so a big beat coming in versus expectation. And the profitability seems to be driven by the losses being narrowing in the associates of the company, because I'm looking at the consolidated earnings of the company. The revenue is largely okay. What's really giving it a fillip is the fact that the loss from associates has gone down. giving you the hint that whatever was the burnout that was expected on the likes of Blinkit, etc., that is going out, and that's the reason that stock is reacting very, very positively, sharply. Mayuresh, to begin with, you have a view on Zomato?
Yes, I think the numbers have been pleasantly surprising, Anisha. I think the bottom line is not something that a lot of people were expecting. I hope there are no one-offs. I'm just trying to open the press release. So I think apart from adjustments, I think if this bottom line is coming through, I think it's a clear disclaimer from the company's side that they will be also profitable before the September quarter, and they are probably doing that in the right spirit. You're absolutely right. I think in terms of the accumulated losses from Blinkit, at some stage, I think the consolidation on cost efficiencies that the management was carrying out was expected to play out. And a large element in the profitability has come on the balance sheet. And if this sustains, you'll see a re-rating even from the current levels. I know the stock has moved up significantly, but if this is to sustain and the management commentary hints towards this, you're probably looking at a re-rating candidate as far as Zomato is concerned.
Wow, a re-rating candidate despite the fact that this year has been quite stellar for Zomato, and we have seen a massive run-up from what those levels of 40 thereabouts that the stock was trading at the bottom around 45 bucks, I think end of last year. That's managed to double in a matter of a few months, and what Mayuresh is saying, if this kind of performance really continues, it could be a further re-rating candidate from here on. The stock is already up 4% on an intraday basis. Let's ask Karan as well what his view is on the numbers. Karan Thorani from Elara Securities joins us now. Karan, just to quickly run you through the numbers, the company has reported a profit of around 2 crores versus expected loss. The food delivery EBIT has come in at 186 crores versus 82 crore on a quarter-on-quarter basis, and even the Hyperpure Supply EBIT has reported a loss at EBIT level of 29 crores, but that compares with a loss of 40 crore in the last quarter. So seems like an overall improvement coming in for Zomato. Karan?
Yeah, I think on the profitability standpoint, number compelling, and it's just like every quarter phenomena that on a Q-on-Q basis they are increasing their EBITDA percentage as a percentage of GOV. It was 1.2% last quarter, and it's heading more towards 2% plus. So they're on track to achieve their guidance of 3 to 5%. And the way things are moving in terms of profitability, I think this could come in the next 2 or 3 quarters.
Karan, what's your own estimate with respect to the company turning breaking even? Because I think they had talked about breaking even in terms of, adjusted EBITDA break even in Blinkit by end of FY24. Do you expect it to happen sooner than that now?
End of FY24, I think still, seems to be slightly ambitious in our view. I think it'll take a couple of more quarters for the break-even to happen on Blinkit, because as a business model, I think, the competitive intensity in Blinkit still remains to be high. And, of course, there are levers wherein they are pushing, products on the personal care side, the categories of products on the OEM side, which are higher margin in nature. And they are also trying to increase the throughput per store, which is also an aid, to overall profitability. So there are levers, but I think breaking Blinkit might take some more time because of higher competitive intensity in that segment.
But last quarter was also seeing a bit of an impact in terms of, IPL, some tournaments, etc., Zomato Gold, etc. Do you think that kind of bump up will happen in this quarter as well, or do you think there will be some sort of consolidation now?
You mean to say the food business?
Yes.
Yes, I think IPL that way is not, obviously there would have been some growth, because of IPL, but IPL was very much there in terms of the last year's base as well. It's not like a quarter where you've seen too much of one-offs as such. In fact, I think Q3 could be a very strong quarter in FY24 because of World Cup and festive coming together. I think this time we've got Diwali, Dussehra, both the festivals coming in Q3, whereas generally it's staggered over Q2 and Q3. So I think Q3 could be a bumper quarter for Zomato.
Q3 can be a bumper quarter. Remember, Zomato has already crossed the market capitalization of over 75,000 crore rupees, and it's building on to gains. Karan, thank you so much for that quick call and helping us understand how we should read into these numbers. So yes, that profitability is a positive surprise, but Q3 is going to be even bumper from here on. That's what Karan is saying. But time now to get the BTSC ideas out of the way from our technical experts as well. Naresh, you go first.
So going in on banks, first is a buy on HDFC Bank, which has corrected quite a bit. Stop loss at 1620, target price of 1670. Second is a buy on Bandhan Bank, which has been showing a lot of relative strength in these markets. Stop loss at 224, target price of 232.
What about you, Kunal?
So would suggest a contra buy on Bajaj Finserv. The stock, I believe, should or seems like forming a major bottom for itself. So would go for a contra buy, 1540 as a target, stop loss at 1460. And Voltas is the other stock which apparently has not corrected in the last 2-3 days and still perched at 790, 800 levels. So would suggest a buy, targets of 830, stop loss at 785.
Okay, Mayuresh, your take on the entire NBFC micro lending kind of space, because that's seeing quite a bit of perk up as well, and even the specialized lenders. Now, whether it's a IRFCL in terms of railways, RECPFC in terms of power infrastructure, or the housing finance company and micro lenders, everything is doing well. Is there a way one can differentiate in what segment is likely to do better versus the other? Should be the pecking order for investors?
So out of the lot that you spoke about, Anisha, I think MFIs clearly seems to be the space where earnings are holding up pretty nicely. Even if you look at the YOY or quarter-on-quarter performances by Ujjivan Small Finance, you could probably look at Equitas Small Finance as well, 5-Star, Ugro. I think all these small finance stroke microfinance banks lending to the MSME sector, microfinance sector, home loan sector are doing exceptionally well. And 2-3 things which are driving it. One, I think on a quarter-on-quarter basis, you've seen collection efficiencies go up quite significantly. Asset quality pressures have come off quite significantly over the past few quarters. Balance sheet strength is very, very strong, which means that the lending capacities for all these smaller banks are still expected to grow quite significantly. Rural economy is showing green shoots at this point of time, and hopefully if rains sustain in the second half as well, you're going to see a huge bump up in the second half as festivities return, where these bankers will probably enjoy the roost. At some stage, I think as rate cuts come through in the next financial year, we're expected to see more synergies getting driven down as yields and spreads will stabilize and expand going forward. So I think it's a very, very interesting space. Earnings have held up, and largely second half should also see earnings holding up for these small finance stroke microfinance banks.
Okay. Separately, what's coming under pressure, Vedanta, of course, that deal is having an impact. Godrej Properties, wherein the start of the year has been a bit subdued. As far as the earnings are concerned for Godrej Properties, Kanza and Nerolac did not enthuse the market with its earnings at all. So that stock is down about 5%. And then Interglobe Aviation, a bit of a profit booking, a sell-on news given the fact Q1 was bumper. But going forward, it's going to get turbulent for them. Let's see where it heads. And then Delta Corp, of course, on account of that GST being held at 28%, is seeing a bit of a slide. You know what, Mayuresh, what's your view on the entire paints industry? I know it's not the most seasonally strong quarter, but historically people do use such opportunities to buy into these names as well. Whether a Kansai, whether a Asian Paints, would you buy into these names, or given the impending competition and more players coming in, it's time to maybe stay away?
Competition will persist, Anisha. I think there's no two ways about it. But there is a lot of opportunities for all these players going forward. If you see the numbers, I think the volume growth has been quite reasonable enough. Second half obviously is expected to be very, very good. Expectations again, crude bumping up a tad bit from what we've seen in the past few quarters will mean that the price cuts that we normally expected might not happen quite significantly, which means that the margins might get protected. But to a large extent, I think volume stroke value growth should continue. Obviously, leaders like Asian Paint might continue doing well. But at Markets with India, we like Indigo Paints at this juncture, Anisha. Both the EPS-RS rating looks extremely strong. Expectations in terms of volume growth, specifically in the categories that they cater to, niche categories, which includes your enamel paints, wood paints, ceiling paints.
Okay.